Welcome to the press conference for Arla Foods annual result 2019 here in our headquarters. To both you present here in the room and those are joining us online. When we look back on 2019, it has been a both exciting and successful year for Arla Foods and for us as dairy farmers. We have strengthened our business and democracy, and the very stable milk price throughout the year has allowed us look ahead even more for the future of our farms. We as dairy farmers and our cooperative have taken the lead on the climate and sustainability discussion agenda, you can say, with our ambitious climate targets to become climate neutral in 2050. And our actions and climate ambitions have been well received by customers, consumers, politicians and organizations. We have already come far, and we are prepared to take the next important steps in our effort to future-proof our production and secure dairy a strong position going forward. I am sure that when we look back some years from now, we will acknowledge that 2019 really was a landmark year for us all and a year of major changes. Looking at the business side, we are pleased to be able to present strong annual results for 2019, where our products continue to gain popularity and trust with customers, and where our business is robust and able to invest for future growth. I would say we are well equipped for the future. I am now pleased to give the word to our CEO Peter Tuborg and our CFO Natalie Knight to take you through the result 2019. Welcome.
Thank you very much, Jan, and also welcome to all of you here in the room, as well as on the internet. Thank you for coming today at this press conference. I'll do this very short, and then I think I will leave the word to Natalie to take you through all the details of the annual report. But just a few remarks from me initially. One, let me just say very bluntly, it's been a good year for Arla Foods 2019. There's absolutely no doubt about that. Two, we have on almost all parameters, no matter how you analyze it, become a stronger Arla Foods. Stronger after 2019 than in the beginning of 2019, and that's undisputed. I am actually proud about that on behalf of the entire 20,000 employees in Arla Foods. And I'll also say that it's my 15th annual report in Arla Foods, so that's also a landmark for me. And I can safely say that it's probably the best annual report that I've delivered, just to say it as it is. And why is it I say that? It's because the top line has grown in the right way. We are not occupied on whether the total revenue goes up and down in various zones or regions. That's actually not something that we have focus on at all. What is in our focus is that the product mix and the brand mix and the products that we deliver to the markets are improving year on year. That is the strategy that we call Good Growth 2020. So you can actually understand that when we have more than 5% growth this year, which we've never tried before on our brands, that is something that we are a bit proud of, and also better than what we announced at the half year. Second, our efficiency program has delivered more than expected, but also more than we've seen any other efficiency program delivering through the 15 years that I've been here. So in that context, our efficiencies are also improving. Then I'll also say it's been a very, very busy year in Arla Foods. It's been the highest CapEx or investment program that we've ever had. And actually the organization has been very good at spending the money, I would say. We've never seen that at that rate, and that's actually the purpose of having an investment program, that you actually do the right investments, because the investments are there to make sure that also the coming years, 2020 and beyond, will go in the way that we develop itself in the way that we would like it to. And then the last thing I would say, it's also been very busy in terms of the whole sustainability agenda that our chairman, Jan, started talking about. I think safely that Jan and I can say that we've talked with farmers in the thousands throughout 2019 in all 7 countries, talking intimate discussions, talking about how the entire value chain can position itself on the sustainability journey, the CO2 journey going forward, not only towards 2030 but also 2050. And remember, we announced our climate ambition very early, actually, when I compare to many other companies in the beginning of 2019. And since then, we are not as much occupied in setting targets. Now it has been about actually delivering concrete results, which is also why it's worthwhile mentioning that we have changed 1.2 billion cartons in Denmark, Sweden, and Germany predominantly to more CO2-friendly cartons. That has been a really major achievement, actually, and you can see and look and feel when you touch the cartons that it is actually a more sustainable product that took out 9,000 tons of CO2, just that one case. But there's been so many other cases, electrified trucks in Sweden, and also testing in Denmark, and we'll see more of that going forward, and many more activities. But the sustainability agenda has, from a management point of view and board point of view, I would say, been a very busy year. So on that note, I'll hand over to Natalie and just take the opportunity of thanking 20,000 employees for doing a fantastic job. Thank you very much.
So good morning also from my side. And I really want to start just by reiterating a lot of the comments you've heard from both Peter and Jan, which is if you look at 2019 for Arla Foods, this was really a year that was all about us improving our competitiveness, beating our financial targets, investing in a big way, and then to see it hit with consumers and our branded numbers, that's really something we're proud of. And we know that's something significantly better than what we're seeing in other places in the industry. So let's start a little bit with what's happening in the macro trends, because I think this is always one of those things that you look at from the outside, and sometimes this gives you a great view of what's happening, and sometimes it can confuse a little bit. So when we look at 2019, what we know is there were some things working against us. On the one hand, first, overall economic growth was declining a bit versus what we'd seen in the prior years, especially in emerging markets. If you remember what had been happening in the Middle East or China with trade wars or conversations, at least of those with the US, that's been something that has been a little bit of a tougher trend out there. Similarly, on dairy consumption. Overall, it is growing. These are European numbers, and you see that cheese, which is 50%, is growing. So that means overall it is growing. But it is less than it was last year, where you saw those numbers being closer to 2% on the cheese side. Lots of political volatility as well. It's definitely been a year where, in addition to Brexit, we've seen, Trump action and all kinds of other things that have really driven, I'll say, more insecurities in the market than what had been there. And also for us as a company that is euro-based, seeing in particular the dollar strengthen against some of our main currencies. Now that's what you saw on the outside. So you'd say, hey, maybe it's getting a little tougher. What I think I hear the most from people is, wasn't it a pretty quiet year? The milk prices were pretty stable, the volumes were pretty stable. And what I would say is, actually, I think that really hides one of the big things that was happening within our industry. And that's this fat and protein price shift. So what we saw happen this year was the protein prices increased significantly, but fat prices, which is one of our big competitive advantages, is something that dropped by 40% over the last 15 months. And what that meant is, as a company, we've had to be very, very focused on our price and margin management, because we were seeing literally billions move within our company between the categories and where profitability was taking place. So that's something where I'd say, for what people might think is a quiet year, really hats off to our commercial organization. The last one is, you heard about our own efforts on sustainability. I do also want to call out that 2019 was a year where, as excited and moving and making things happen as Arla Foods was, there was also a whole lot happening when we look at it from the external side. You know, this was a year with the Green New Deal, with everything happening in different markets, that we saw really a new attention to this dynamic. So let's look at some of our operational highlights. When we look at 2019, some of the ones that I think are worth calling out that are very important. First, we did launch that carbon net zero target, and in 2050, we intend to be one of the dairy companies in there who is really set the tone, made big changes. In May, we took over the Mondelez Craft business in the Middle East, and that's something that's already driving significant additional revenue for our business. Calcium, you heard, this is our efficiency and savings program. We're now halfway in and well above halfway to our targets, so very pleased with that. It was a big year for Arla. I can't emphasize that enough. We really, on the one hand, got a similar look and feel in terms of how the brand is out there. We changed up a lot of what we were doing. We hit 500 million digital engagements, and this is something that we think is really helping our brand become something that's going to be a household brand across Europe in the not too distant future. Nigeria. This is one of the fastest growing markets, and it's all about being on the ground and not just selling our products in, but also working with local farmers to really improve that industry. We're one of the leaders there, and 2019 was a big year for us on that front. In Sweden, where we've taken some very advanced steps in terms of our sustainability activities, we launched our first carbon net zero dairy products. Now, obviously, those use offsets as part of the way that we get to those numbers, but it's something where it's really a commitment from our side to make sure that we're able to get products to consumers that are really delivering that both healthy and sustainable criteria. The last one I have over here is Arla Pro, and it's a small example of a much bigger trend. And that is, as we move with flexitarian consumers, where it's all about maybe less drinking milk, but more eating dairy. This is a place where we're seeing a lot of new opportunities. And this one in particular, we brought out Arla Pro with McDonald's. It sold out in Sweden within 10 days. And it really shows that there's a big pent-up demand for these kind of products. And this is something Arla wants to be part of. So let's now go to what are the financial figures, because I think this is, obviously the most important things. We'll start here at the milk volume, which you see milk volume declined this year. Was pretty flat in terms of intake from our farmers, but we were able to reduce our dependency on external contractors, especially in Germany this year, where we saw those milk intake decline by almost 10%. So as a result, we still saw our revenue increase, which tells you that's a testament to how the quality of our business is improving. Less milk, more revenue, we're doing something right. When we look at our performance price, it's 36.6, and while for our farmer owners we always want more, let me tell you this is the second highest level in the last 5 years, and this is really something that, add that plus the stability of the price, I think has been very good in planning processes for our farmers. The last one is our profit share, which also improved nicely this year to 3%. So we've talked about some of the headline figures. Let's also talk about the quality of business indicators, because I do believe that's one of the most important things when you look at a company like Arla. You need to see, are we doing the things that not only secure our opportunities today, but also going forward? And what you see here is our strategic branded volume growth. So that's how much of our branded products are we getting on the shelves. It's up 5%, 5.1 in fact. This is more than double what we're seeing from competitors out in the marketplace. So a very, very strong sign for the group. Peter mentioned it may be the first time that we've had that kind of level of growth at Arla. It's certainly right up there. What it also has allowed us to do is in our branded share, which for us is one of the critical quality indicators, because it tells us, are we getting more product with higher margin, with less volatility that connects with consumers? We hit our 2020 target already this year with 46.7. The target had been 46. So expect us to continue to move that target upwards. International. is the other place that's really critical for us in quality of business. This is a place where 90% of growth in the next decade is coming. So it's all about we need to be there and be strong. We've passed the 20% mark, and you can expect that number to grow again in 2020. So let's talk about those brands, because I think that's really the piece we're all very, very proud of within the group in terms of how that's developing. And what we know is, if we look at I think for the first time in several years, we've seen Arla really be the leader up here in terms of our numbers. And that's important because it's 2/3 of our revenue. So when that one moves, everything moves. It's also a testament to us being a lot closer with our sub-brands to what the consumers really want, and those are healthy, sustainable alternatives. Lurpak was one of our businesses where we were expecting actually this to be a very tough year for Lurpak. As I said, the fat prices were declining. We were trying to hold prices. That means getting volumes to grow. We actually had expected pretty flat volumes. So to be able to grow in that environment is something we're very proud of with the 4%. It's driven very strongly by new innovations and really moving into good markets. You see our milk-based beverages. This is one of the key areas of growth in the market. A big driver in here is Starbucks, but we also have Matilda, Kokio, and other brands. This was up nearly 15%. Our Castello brand, this is specialty cheese. It's continued to have be a little under pressure, primarily because of lower sales in Germany and the UK. We look at Puck. This is one of our big brand in the Middle East, and this is a place where we grew nearly 5%, and this, I would also call out, excludes any of the new revenue from the craft business. So this is really driven by our continued strength in the processed cheese and also some new innovations. So if we look at things by region and geography, let's start with Europe. This is our big region, as you know. This is where we've got over 70% of our revenues. And what you see is, again, a volume growth of almost 3%, much, much better than what you're seeing out in the industry at the moment. Brand share well above the 50%, also key for us in determining quality of business. But I'd also mention, if you look at the revenue on an absolute basis, it's actually declined. And the reason for that is basically two things. One, us moving out of private label business, which is unprofitable, so it's improving the quality of our business. And secondly, exchange rates, this in particular in Sweden. When I look at this by market, just to give you a high-level view of what's going on here, the UK, we're very proud of this result. It's up almost 9%, pretty unprecedented in that market, as a result of growing brands' strength across the board. I would also call out, however, that Yo Valley, our first-time inclusion of that brand, was in this number as well, and it's certainly a market where we see lots of competition going forward. Sweden. This was a market where we had expected to have a really difficult time in 2019, because we know that there is a declining consumption and declining dairy in that market. The fact that we were able to deliver strength in that marketplace and growth is something we're very, very proud of, because it is one of our core branded markets, and it really was driven by that focus on sustainability, which the consumer is really looking for. Germany. Sales are up almost 3% in terms of our volumes there, and that's really driven by cheese, by butter, and of course by Starbucks in that marketplace. Denmark, we've been able to pass the €1 billion mark. Remember that this is a market where we had unprecedented growth last year, so to be able to drive this one up is also something very proud of. Finland, this is the market where after we had a real turnaround versus last year. Sales are up 3%, over 3%, and this is a place where we've really kind of, I'll say, hit that magic between sustainability, innovation, and commercializing things. Very proud of that. And when we look at the Netherlands and Benelux, this is a place where we've now hit, I'll call it the magic 10%. We're a smaller brand in that marketplace, but where we're really growing from strength to strength, and again, 5%. So let me call out, you see all of our markets on a volume basis within Europe are growing. This is the first time we've had that in over 5 years. It's something we're, really see as the strength of the last few years, bringing our European business together and really making that much stronger in terms of getting synergies across our markets. We'll move on to international markets. So this is everything outside of our core European markets. And what you see here, volumes are up over 10% in the branded space, very important to us. And on a revenue side, we've grown over 200 million euros in the last year, allowing us to really top that 1.8 billion number. And again, you see a very, very strong branded component in there, which talks about the quality of sales. Let's look here now at the different markets. The biggest one for us is always the Middle East. This is a large part of our business. And here you see the strategic branded growth number up 7%. That's driven largely by PUC, Lurpak. It does not include the craft business. If I did, that number would be twice that level. So it's real strength in that market. North America, this is the one market when we look at our regions where things went down. You may remember we made a very conscious choice in the last year to drive profitability versus sales growth. We exited the dairy aisle and have really focused on our kind of specialty cheese history and our strength there. When we look at Southeast Asia, sales are up 24% in terms of volumes with double-digit growth in every single market. When we look at China, that one is 62%. This one, let me call out, a lot of this growth last year has come from our infant nutrition business, super important, but also something where we had been restocking versus the prior year. If we look at it on an underlying basis, we believe the levels are probably more in the 15% level. And obviously, this is something when we look at 2020 that we know is going to be a challenge following the coronavirus and things that are happening there. West Africa, also up over 20%, really driven by our blossoming business in Nigeria. This is a place, if you don't know, we had 5 years ago an 8% share. We're now close to 25. So we really have increased our business there. And when we look at the rest of the world, this reflects over 30 relationships we have with distributors, JVs, small owned offices. And this is a place where it's very highly profitable for us. So it's nice to see that growing also at a 6%. Let's move to AFI, which, as you know, is our ingredients business. This is our highest margin business within the group, and it's really where we're focusing on infant nutrition, sports nutrition, other things in food as well. And we're excited that both the revenue and our value added percentage grew 9 points. Our goal has always been to have at least 2/3 of our sales coming from that value add piece of the business. And as you see, we're now at 68.5%. This is an exciting opportunity for us because it really shows a strength that we have vis-a-vis other folks out in the market, and that we have been able to really drive this in a way that brings high quality product to third parties in a large case. So, as a CFO, I always like to look at what's happening on cash and cost. If we look on the cash side, that's our leverage. It's 2.8. You know that number means if we took our profits and we wanted to use them to pay off all our debt in 2.8 years, we could do it. This is a place where in the last 4 years, we've really moved from being, I'll say, low in the pack vis-a-vis our competitors to now being at the high end of that. This comes from great cash management and in particular big working capital improvements. And as a result of this is really what's given us the firepower to increase our investments as a company. You may remember also that this year we had record investments of over 700 million at a group level, and this is because we've had this outstanding leverage. On the cost side, calcium is our big cost and efficiency program. We delivered 110 million euros worth right into our bottom line. And I think what's really important here is if you look at the 224, now 2 years in, our goal is to be at 400 million. We're at 224, so we're ahead of where we need to be. This is a really vast program. We've got over 4,000 initiatives happening in here, and it's really changing the way we invest, we work, and we really collaborate as a group going forward. When we release our annual report in about 10 days' time, you will see that we're going to have a whole new section on the environmental and social and governance reporting. This is something we're really proud of because I think this is, we put our money where our mouth is, and we are showing you very much our commitment on the sustainability KPIs. We've had them audited with a limited assurance by auditors. And you'll see this is a place where we've got a real focus on the one hand, what we call stronger planet, so that's climate, but it's also waste, recyclability, biodiversity. And then the place that I think is really the core to Arla's heritage, which is our stronger people. And that's how do we make sure that we've got really healthy products, that we're increasing accessibility and education about what is good nutrition. So you'll see those in there. The last thing I have on this chart that I think is important is that if you look at our emissions, because one of the other things we've done in 2019 is committed to the science-based targets, which I think really says we take this very seriously. But I think a lot of people wouldn't know that in our company, really very little of the CO2 actually is something we control directly at a company level. It's only about 5%. And you've got 96% that either happens on farm or something in terms of end-of-life recyclability, transport outside of what's happening directly to the company. So this is really something that says for us to make the big commitments that we have done, we really are taking a lot of things that are not only directly in our control, but where we've got also big support from our farmers to make this happen. I'd now just like to kind of summarize where we are in terms of our financial targets. What you see for 2019 is, again, that high level on the revenue versus our target. You see the strategic branded growth level at a very high number. The quality of business KPIs improving greatly, and really down also on the profit, the cost, and when we look at our leverage, all of those moving right to the high end of where we wanted them to be. For 2020, we're also increasing our ambitions again. We really want to keep that momentum going. You see that our revenue, we want to increase again. It's always a number that moves a little bit depending obviously on milk volumes and particularly exchange rates. You see a step up versus our 19 original ambitions in terms of what's happening on the strategic branded growth. Don't forget there will be things coming in there from China, and some of our results probably are things that are going to be very hard to be able to step up in 2020. Both our branded and our international shares will exceed our 2020 targets as part of the good growth. And when you look at our profit share, our calcium, and the leverage, you see, again, very much the commitment to those numbers we give you every year in terms of what we believe we can do. So for me, when I look at this year, it's one I'm very proud of. You see us hitting the results, stepping up the ambitions as we go into 2020, and I hope also really understanding that strength that we've had on the brand side, because that's the thing that we believe at the end of the day really drives that connectivity with our consumers and the long-standing growth opportunities for us as a company. So thank you very much.
Thank you, Natalie. And now we will open up for questions from the room here. If you have any questions, please state your name and which media you're from. And we are going to use a pen mic for you that I will pass around. Oh, there it is. Any questions? Is it all completely clear? Or
Thank you.
Go on.
Yeah, it's
Good. 2019 was brought a very stable milk price, unprecedented stable milk price. What is your expectations for 2020?
We expect a slight increase in the milk price, and it will come out to very soon.
Any other questions? Yes. Please state your name and which media you're from. Sure.
Lars Atrup, Jyllandsposten Finans. What has been the reason for this unprecedented stable milk price? It's been we haven't seen anything like this since like for 10 years.
That's true, and actually, it's. I would almost say it's a coincidence, because if you look underlying, there's been an enormous volatility. Actually, I think on one of the first slides that Natalie showed you, you saw the big shift in the value of fat and protein, and that's actually a volatility over 12 years. You know that we're coming back now to the normal ratio between the value of fat and protein, but it's happened actually through 2019, so very quickly, and that has actually shifted values between the various categories in terms of, in our case, it could be measured in billions actually. So there's been underlying that very stable, calm sea, so to speak. There's been a really boiling volatility underneath, where not only Arla Foods, but I think many other companies have worked hard to maintain or get the best out of it. And in our case, we maintained a stable milk price. Others you have to look into how they've sailed. But underlying, there's been a lot of volatility.
And it's an advantage for Arla.
We think it's a slight advantage at the moment, because we're coming back to the world that we have set up our business around. I think that the advantage will more be seen when we look forward than rather into the annual account of 2019. Here we can't really see the advantage because it has come rather late in the year. But we do see that our margins on our branded butter, and remember we are probably the biggest branded butter and spread company in the world, with Lurpak and Bregot and Kærgarten. So now we are the biggest, and that of course we've seen increasing margins simply because the cost, the raw cost of fat has gone down, and that gives us an advantage. On the other hand, of course, you'll see that the margins on milk, so the white line products in our industry, are under pressure, and we'll need to see a little bit of inflation there to restore the margins there. But that's an industry comment, and a very forward-looking comment, and we'll see how that goes.
Question? Name and media you're from?
Yes, Oskar Schönning from Swedish paper ATL, Business Journal for Farmers. If you compare your milk price to others,
Yes.
how would you say you have performed?
We've actually been happy about the milk price. If you look at but not satisfied, because you can never be satisfied with the milk price. We are here to make sure that the milk price is as high as possible, and in any given time. And actually, when we look at the targets we had for this year in our relative performance, which by the way cannot be concluded before all annual accounts are out, and that will be in May 2020. We will have all annual accounts. But so far, we have a feeling that we have improved our relative performance with 1%. So that's one notch in the right direction, and that's a sense we have at the moment. But it will be published finally in the month of May. Yes, it's been a year also where you have to remember that we paid out the entire profit of Arla Foods in March last year, which was a very significant payout to the farmers, over and above what any other company in Europe has done.
But why have you stopped publish your peer group numbers? That's the comparing numbers. You did publish it as long as the numbers were good, but when it started to get worse.
That's absolutely untrue. So I have to correct you on that. We publish our peer group numbers every year in June, because that's where you can do it. You cannot do it when you don't have the annual accounts from other companies. It's simply not impossible. So if I try to allude right now to what the peer group was, it would be pure guessing. I have, of course, internally a guess about this, but you can officially not do it. I would almost say legally not do it before all annual accounts are out. And we are publishing that every year.
But it was in the annual report before, up until I think 2060, and
No. Not in the period of good growth 2020. Simply because we cannot do it. We also changed the peer group to a much broader peer group, which meant that we simply need all the annual accounts coming in. We talk with our board of representatives, 200 elected people, at every meeting about where we are, but that's an internal, non-audited number. Externally, we have to, according to audit laws, make sure that it's also an audited number.
Yes, question here.
Just one clarifying question. You say you expect it to be 1% better. That's 1 percentage point.
Yeah.
Meaning that you will be at 103 or?
Round about there, yes.
Okay. And you mentioned the total payout last year, but that's in the 2018 performance,
yes, but
isn't it?
we talked about the cash payment in 2019 was quite significant, yes.
Yeah, but that's in the measurement for 2008 for your performance in 18.
That comes from
isn't it?
18, yes. But the question here was what was the payout in 2019? So from a farmer point of view, that's of course.
I just wanted to be sure that when you say you have improved your performance by 1 percentage point, it's not because of the big payout.
No. That's because of the annual report. But it was coming back to the question how the payout was in 2019. So seen from a farmer point of view, you have to look back.
And it's also important, if you remember that leverage number that we have, that did hit in the same period because it is a cash item. So it is something where, to be able to hold ourselves, in that range at the very, right at the very bottom of it, which is where we want to be, that doing that with unprecedented investments and the full payout of the profits in the same period is something, that is, we haven't been able to do before.
Question here.
For years, we've been talking about more volatility on the milk price, and now we've seen this unprecedented stable milk price. What is your expectations for the coming years? Will we see a more stable milk price, or will the volatility come back?
No, I think industry analysts and so I'm now talking about the consensus in the market is that the volatility will still be there, and that 2019 was an unprecedented stable year. And as I also said, underneath you actually have seen the various categories going up and down. So there's been a lot of volatility. I mentioned the biggest one, but you've also seen in the trading area, you've seen big volatilities happen. And I wouldn't say it was a coincidence, but it almost looks as a coincidence that when you then add all the volatilities, the pluses and the minuses, it looks very stable. I'll also say that our branded growth and the way we have been conducting our business has also meant that we could uphold a rather stable or a completely stable milk price, also at times where the market was a bit tough last summer.
Sorry for this, but I have the annual report for 2060 here, and you have the peer review, and it's like, and you write it is, it's like, what do you say, förutsägelse and preliminary result. So what's if you should state the same number this year, what would be the number? What would be your qualified guess on this peer group?
It will not be much better than what Arne Astrup, who's sitting next to you, who's following us very closely, said 103. That would be my absolutely very best and safe guess.
103.
Yeah. And it was 102 last year.
Further questions for the results?
Jørgen Rudbæk from Fødevare Watch. Could you please elaborate a little bit on the British business in regarding to the Brexit scenario, and you talked about some growth in the branded business, but also maybe some difficulties in other parts of the business over there?
Overall, we've been very satisfied with our British business development. I mean, very, very close to, but not between 8 and 9% growth, as you saw in our branded businesses. We haven't seen that before, and we will not see it again because they had a full package of innovations that were unprecedented that actually came out, and they were very successful with those launches. And we also gained some contracts, and we have good relations, and they've won awards and all. So I'm on our view on the British business. It's actually very good, and we're very happy about how it's developed. Of course, we are still waiting for the outcome of the whole Brexit negotiations. We know now, as everybody else, that 2020 will be, let's say, uneventful in terms of Brexit, because we don't know anything about the outcome for the very end of 2020. So I think the risk scenarios or the excitement around what's going to happen around Brexit has been postponed to 2021, and so far so good. We are happy about the business.
So the uncertainty regarding to the Brexit scenario hasn't affected your 2019, and you're not expecting to get any effects in 2020?
No, and I think that many other companies are operating like we are in this size in the UK know now that the changes, whatever they may be, due to the negotiations that are happening right now, will not take effect in 2020, but will affect in some way, and that can go, I can tell you from the scenarios we have conducted, it can go in all kinds of directions, so that would be rather speculating on the outcome of the negotiations, but that will be in 2021, and that's how it is.
Can I ask one more?
Yes.
That's about the Chinese business. First of all, you maybe could elaborate a bit on the 2019 development. What went good and what was difficulties? And that leads to the other question regarding to China, of course, Corona. How do you see the first part of 2020 develop there?
Yeah. Our growth in China was very big, around the 60%. That is also reflecting that there was in the area of infant formula, so baby nutrition, a build-up of the whole pipeline through the system. You remember, or maybe you don't remember, but the market was, due to change of legislation, also affected us in 2018. So there was the whole pipeline of stock building was very empty. So it's also showing probably a slightly more positive picture than the underlying growth, which would probably have been around 15 to 25%. So when we look at the consumption growth, but the official numbers are as they are. Nevertheless, it has been a great year for all our categories in China. So I don't have anything to say about that. Of course, we are very concerned, as everybody else, around the coronavirus. At the moment, I can't publish the numbers for January, but they actually look okay. But we do expect that 2020 in China, revenue-wise, will be affected. And I'll be happy if we could have a flat development. Then we should be very happy. Our employees are working from home, most of them, and we have several hundreds, as you know. Our sales is not yet affected, but we expect that it can be affected. We are limiting all types of travel, as everybody else, and following rules and regulations. We are very happy that we have a very big partner in Mangyu, who are very close also to the authorities, and that gives us, insight in how we should conduct our business. Over and above that, we don't know more than anybody else.
But setting aside the Corona scenario, what were your expectations to 2020 before this scenario evolved?
The expectations would have been around 15% growth for 2020, which is a very sustainable yet still very high growth. And the underlying market is growing around 5%.
Follow up on the baby nutrition in China. How much of this growth is your own brands, the Baby and Me, and how much is
AFI?
Third-party manufacturing.
Third party.
third part? Yeah.
The published numbers are only our own products, so our own retail products. So when we publish that through the international zone or segment in the annual report, and that's only retail products. So the infant formula where we produce for others, big international players, is captured in the AFI revenue.
Next question. Name and media.
Lars Winter from Mælkeritidene. You announced that calcium is delivering even more than you expected. What does that mean to your employees? Are they still happy to be in Arla Foods? Do you have any idea if Arla has become a more or less attractive workplace according to calcium? I don't know if you have any measurements about that.
We have much more than an idea. We measure this actually quarterly. And we also do it annually, as we've done for many years in a very big, we call it barometer measurement, where employees are answering more than 100 questions. Also big sections around calcium. In 2018 we saw that the engagement came from super high to pretty okay, but we could see that it affected in 2018 our employees. We saw in the measurement that was done in November 2019, so not long ago, that the engagement came back up again, that people are getting used to calcium, and that we can actually, and I think that, and we can explain why also. One thing is that more and more people understand how to work with calcium. But we can also see now that many of the investments that we are doing could not have been done if we hadn't done calcium. I can safely say that for sure. We would not have suggested to the board to invest in our big innovation facility in Nervium, in AFI, had we not had calcium, because we would simply not have had the power to do so. The Pronsfeld Tower, which is our biggest investment as well, I would not have proposed that had we not done that. So the people, and there are many other examples. And if you ask our UK head of UK, Ash, he told his employees, rightly so, more than a year ago, or approximately a year ago, that one of the big contracts, retail contracts he won, he only could win simply because his production had become more efficient, so that he could actually win a contract. There are many of those examples, and it of course takes time to produce them. And second, then also to understand them and trust them as an employee. And we've come to that point that people understand and trust it, because that's also something we measure, and we do that quarterly actually in what we call an e-pulse, where several thousand employees, not all, but those who can and should be near a computer, can actually measure and say where am I personally on my journey. And that has been producing positive results, which is good and important, of course. You will still find employees, of course, who are not acquainted to calcium and who would say, what is this? But I think, I'm very sure that you come from companies that when they go through changes, uncertainty is always something that is not welcome. Certainty is something that you would like to have. But we've come back to the point where we would like to be overall.
You're losing Natalie. What's the analysis behind that?
The analysis is that she's done a fantastic job in Arla Foods, and I'll miss Natalie very much, and I know the board will as well. But you know, when you do a great job in a company that is very much in public, then others, they also get the chance to see that Arla Foods has a great CFO, and that's what happened. So I congratulate Natalie on her new adventure.
Natalie, do you want to comment on this?
I guess I would just say I think this is one of, I've been so happy to be at Arla the last 4 years, and I feel like I've learned a lot and been really privileged to be part of this journey on Good Growth 2020. And I think, I feel like as I leave, we're in a place where it's very much about executing on the rest of 2020 and really starting to kind of, I'll say, dream about the next decade of what dairy can be. And I am, looking at it with a smiling and a crying eye, as they say, in terms of it's a great opportunity for me with, I think one of the strongest retailers out in the world today. But at the same time, Arla's always home, and it's a place where I've been very, very proud to be part of the company.
Last question.
The sales in Europe has gone slightly down. Do you expect that to continue, and has it got anything to do with the young consumers cutting down on dairy consumption?
I'll start, and then I think Natalie can continue in more detail. It has nothing to do with the latter, actually. If you look at the milk category, yes, we see it predominantly in Sweden and Denmark, but we are also seeing the category as such in Germany and the UK, or let's just say in Northern Europe, is declining between 2 and 4%, which is a higher rate than we've seen historically, and we see that from I think very much the whole plant-based movement. That being said, when you then look at cheese consumption, it's actually going up. And if you look in Europe at what we call milk equivalent, so milk consumed in one way or the other, you actually see a slight growth in consumption. So we can't say that on a category level or in Arla Foods that what we are seeing in plant-based has any impact on the overall revenue. We are not measuring revenue in Europe. It's actually not part of our strategy to grow the overall revenue in Europe. In the same time, I will say it's the overall strategy to grow our international revenue and our AFI revenue, as you know from our strategy. What is important in Europe is that we year on year change our product mix to more value-added products, even at the expense of also stepping out of contracts where we can find better use for the milk. And that happened in 2018, very big time, as you know, and in a smaller scale, but still a scale here in 2019. And I expect that might happen also in 2020. But it's okay, as long as the branded growth and the innovation pipeline is growing.
I was just going to add to that. I think if you look at kind of our activities, one of our biggest investments right now is the milk tower in Bronsfeld, and one of our real opportunities that we see as we go forward is taking milk that we have in Europe and really bringing it to much higher margin products in other parts of the world. So as part of that journey, we're looking all the time at how do we optimize our milk utilization, right? And so when we look at Europe, we've got a lot of milk still in what I would call private label contracts where we don't have the profitability that is really what it should be. It's much more similar to trading levels. And so as we're able to take it out of that business and transfer it into either branded sales in Europe, which you saw was quite good, or into our international business, that's how we're really valuing up our business.
And just on a side note on private label is still a very very relevant part of Arla Foods and will remain so. We have in all our major markets in Europe good strategic cooperation with our big retailers, where we also innovate on private label and are closely working together on logistics and optimizing parameters. That being said, we do still have private label contracts that from time to time where we need to say, sorry, we can use the milk better, and then we step out of them. We've also seen this year in the UK that we step back into some contracts, but we see that more opportunistic as optimizing the tail of our milk pool of 14 billion liters of milk. It's not a strategic discussion we have, not even at board level. It's simply optimizing quarter by quarter the least utilized milk.
I'm just trying to figure out if you see plant-based products as a threat, because recently, for instance, Starbucks announced that they would cut down in the US on their consumption of dairy products. And Starbucks is one of your customers.
Yes, and well, it's actually a colleague of ours. We have a great strategic partnership. We are producing and selling and marketing. We're doing our own marketing on all Starbucks products that you see here in the entire Europe and Middle East. So we are closely, intimately together. We are already today producing and selling and marketing plant-based Starbucks products. We've been doing that for at least a year now. We have already announced, and I will do that again, that we will this spring come with our own brands in plant-based. I've tasted them; they taste fantastic. They are very good, and I know the brand name, and I know the look and feel, and I saw it even last week. But I will not tell you anything about it because I will let both the Danish and the Swedish organization announce that themselves. And there's nothing new in this, by the way. We announced it before, so it's part of the category. And remember, Arla Foods was used to be until 3-4 years ago one of the biggest juice producers in Northern Europe. We sold that for right reasons. So being part of what I would call adjacent categories that are close to dairy, which plant-based is not something that we are seeing as a threat. We also see it as an opportunity on behalf even of our farmers.
On the same subject, when you see the plant-based movement growing now, was it when you look in the mirror, was it a mistake to sell Rinkeby in 2016?
No, because the part that is growing is actually what we call plant-based. Is different products than the juice products, the traditional juice products. I actually don't know anything about the juice category today because we're not following it as such for all the right reasons that's behind us. Plant-based products and also what we call flexitarian products or blended products, which are growing very fast in Arla Foods at the moment. Are part of that future that we'll be looking into and with excitement, of course.
Oh, we have one last question, and then we need to round it up.
And I think one of the when I talked about flexitarian, one of the we actually see until now we've seen quite some opportunities. There was a picture on one of your slides which showed, and I think you can taste it here next door. The cheese products that we launched in Sweden in McDonald's, which was completely outsold to our and McDonald's surprise within 2 weeks. And so of course we're producing again and then again and trying to understand the capacity requirements. But there are pockets of initiatives also in Arla Foods that try to understand how we can work our way into this I would call flexitarian a new consumption style, because it's not only plant-based, it's a new, much broader change of consumption that we are seeing, and some of that actually resonates very well with some of the cheese production we have, but also our lacto-free is part of that movement, which is growing how much?
20%.
Around 20% in all the countries, and now second year in a row, which and it will be doing so also in 2020, I'm very sure.
So talk about that. Do you expect to quit more private label contract in the years to come?
It's not a target, as I said, as such. Actually, we do have private label contracts and customer partnerships where it's actually on the other side a purpose to increase it. So we don't have any. It's not a target to get in this direction or the other direction. What we're talking about on some of our private label contracts, and remember that we have hundreds and hundreds of private label contracts, but some of them are very opportunistic, and also by the customers seen like that, because that's how they're trading them in and out. But the big strategic partnership we have with some of our Swedish, Danish, Finnish, English, German, and actually also in Holland, the retail customers are really dear to us, and we are also closely working on innovation and optimizing logistical flows, and so very integrated cooperation on many and most of our private label contracts. But then there will always be the last 5% that you don't need, but sometimes they're good to have, and sometimes you step out of them. And we are in a period now where we are stepping out of the last tail of them, and we will also probably be doing that in the next 1 or 2 years in some of the countries. One area is in Germany, where we will see that our Bruntsfeld tower will be, after 2 years of building, ready to export into Nigeria, to Bangladesh, where we have packaging facilities that turns the milk into private label, which is a much better deal for us. But we will happily produce private label contracts if there's a business for us also, and that might happen. Who knows? Let's see.
But your profit in your own brand is probably better than in private label, or how do you see it?
I guess most companies would in the FMCG area would probably have the same profile as us, that our branded products carry higher margins than our private label, that our commodities carry a lower margin, in our case even negative margin compared to our retail products. It's been like that always. But in the space between some of the low-end private label and some of the commodity products, there is room for optimization. We're doing that. I know that other dairy companies, meat companies and other companies are doing that as well. Especially in the dairy sector, you see that optimization going on. But it is around about the 5% of the milk that is, in there. The 95% is in a different space.
All right, thank you all for your questions. Jan, do you want to round off quickly?
Yes, I can say as owner and supplier to this company, I am very proud of what we have delivered this year. Also between my members, we have a lot of good dialogues just now with our members the whole way around in all 7 countries. We have set a really good target for our animal welfare, biodiversity, climate impact from milk production. And the whole way around, we have a good democracy process where we have discussed it. And just now we are out between our farmers to give them the why. And when they understand the why, we have very good discussions. I will say we have met more than 80% of our members over the last 3-4 months in this process. And they are very, very interested in the why. And at the moment, they understand the why. They say, how, Jan? How can we be better? How can we supply to this big issue we have here with the impact of the climate? And I'm sure all owners in Arla Foods agree on our statement about to being zero impact on milk, milk impact on the climate in 2050, and also the way how we can come to the goal. And therefore, as I see it just now, Arla Foods is well prepared for the future. We are well equipped. We are where we have to be with our key figures, both on financial and other things. And then we have only one goal, I can say, in the board and also the management. It's to be the best paying dairy in the performance group. And it's what we work for every day. So it's my close up, and then I hope you have questions to us when we come out in outside the doors here.
Thank you very much.
And some burgers, for those who are here.
Yeah. For those that are lucky to be here in person, there is coffee and burgers where you can taste the food and